Okay, I think I've gotten the go ahead to start. Today's topic is going to be on consumption, and why I chose this particular topic is because right now the idea is coming out to be in terms of valuations to be a little attractive. So I thought that yes, I can put some data out for all our participants, and then I'm going to keep it very interactive. I do have polls, and we can have the Q&A at the end of the session. But I have put in good amount of data that you might already have seen, but I'll share my 2-3 thoughts about it. So if you look at the India story and what people have been talking about India and how it has a huge runway for growth. So if you look at our GDP, the first trillion took us 56 years, and the next trillion took us about 8 years. Right, the second one took us 8 years, and so on and so on. So the number of years it is taking us to reach another trillion is just going down, and you have to owe this to our structural uh, demographics, our potential in infrastructure. Whatever growth that is coming in on infrastructure is leading to consumption growth, right? So if you see, we've already reached that 3 trillion odd mark, and now we've set that target to go towards 5 trillion. Right, this is based on the government spends for the next 5 years, right? And the way we are headed, the way the government is spending on infrastructure, the way consumers are spending, it does not look like a target that cannot be met, right? So in this sort of an environment where your GDP is poised to grow, and India is the only nation that is giving you 7% odd GDP growth, it's a huge opportunity, right? And contributors to such a growth has to come from consumption as well as infrastructure, right? So that's why I said that we should be looking at consumption, and this is exactly how the India's consumption story is going to pan out, right? So I'll take you back in time for everybody to just be aware of how consumption has sort of developed in India and what it has to offer going forward, right? So what are the factors that are really driving consumption growth, right? So first, we've come at an inflection point, right? What we are seeing is that we are crossing the $2,000 mark in per capita income in India, which is very big, right? It's a good milestone for us because we are perceived as a poor nation, and that's not really the case. Right? So we are improving, we are gradually improving. So you compare it to China standards, we have a long way to go, right? Second, India has one of the largest and the most youngest population in the world, right? So if you look at where majority of Indians lie, they're very young. The average age is somewhere around 35, uh, and the number of people that are using the internet also continues to keep uh, growing up, right? So demographics play a huge role. You look at countries like Japan; they are already facing a huge problem in terms of their demographic dividend, and India is well poised to become the talent pool of the world, become the workforce of the world. That's what happened to China, and this is what is happening to India as well. Right? Then there's premiumization. Obviously, when we earn more, we are going to go up the ladder. We are going to start spending on a lot of premium goods. Uh, Again, this is a trend that you're seeing now in the last 5 years, where you're seeing a lot of companies in the FMCG space develop premium products. You're also seeing D2C brands that are getting a lot of traction. People are willing to try out these products. People are willing to go out and spend money to try out all these premium products, right? The most important one is formalization, right? This is the most important one. Why? Because this is a shift from unorganized to organized, right? You saw GST come in. You saw there was a corporate tax cut. You saw digitization come in. And these are factors that have uh, led to a faster shift from unorganized to organized. The minute everything becomes organized, there is a lot of growth, right? So we are seeing a lot of sectors, the share of organized getting much more higher than the share of unorganized, right? Last, digitization. Now you know the entire effect of digitization. You're already using apps to transfer money. You're already anything to do. You take out your phone. Any business is available to you on any platform, and you can easily interact with them, right? That's the level of products and services that are coming out. It's becoming much more easier to access these products, to access these services, right? So these are factors that are going to drive us to that entire $5 trillion, $6 trillion mark. and consumption has a huge role to play in it. Now, let's look closer. The average Indian spends a fraction uh, compared to their peers in terms of per capita consumption, right, on these products, on FMCG, right? So if you look at India, it's nothing. It's just 1.8x for the urban and 0.6x for rural, right? We have a good mix of rural and urban now. So it just comes out to around one. But if you look at, smaller nations, Indonesia, their per capita consumption is very high. If you look at China, again, it's quite high. Philippines, again, a small nation, which is quite high, right? So we have a lot of runway for increasing this per capita consumption. And as we keep earning more money, as we keep going up that ladder slowly, we are going to spend more on these consumption goods. It's evident we are going to spend more. If you look at the trends that are coming in, we are spending a lot more, right? But this is the inflection point that I was talking to you about, right? So private final consumption has been growing faster than nominal GDP in the last 10 years, right? So if you look at 13 to 18, that CAGR has been somewhere around 12%, right? Which is much more than nominal GDP. So you know what is driving nominal GDP up, right? Inflation does play a role, but we are also taking up that inflation. We are taking up that price increase. We are spending a lot more. So our consumption growth, private final consumption growth is going up. This was in 13 to 18. Again, from 18 to 23, we are growing at double digit. We are spending a lot, right? Consumption is growing. Right. The only problem is that the sector has been very expensive for a long time, and now with inflation hurting them, it is coming in a good range that for us to actually have this entire idea series, where investors should be aware that yes, these are ideas that come up. There are opportunities for investors to participate in them. So this is the inflection point that I was talking to you about. We already reached $2,000, and now the aim is to at least reach $5,000, $4,900. This is the inflection point compared to. So you saw what the other peers were doing, and for us to go up the per capita consumption ladder, our income is poised to grow. Right? So let's take a poll. Where do Indian households spend most of their money? You can put in your answer in the chat box. So A is food and beverages. B is transportation, C is healthcare, and the rest is all miscellaneous goods and services. So do put in your answers in the chat box. Okay, we're getting D a lot. Okay, there's A. Somebody said C. Okay. B. Okay. There's a lot of D's and A's. There's very little C, and there's no B. Okay. So this is where India is spending their money, right? This is where Indian households are spending their money. Uh, our share of transport and communication is going up. Our share that we are doing for food and beverages is going down, but it's not like we're not spending a lot. It's just going down. In terms of percentage, transport and communication is really high. Your miscellaneous goods and services have gone up. So yes, D is somewhere right, but not a lot of B's. Uh, right. So it's a mix of A, B, and D, and you already know where you're spending your money. But this just puts things in perspective. This is where most of our money is going, and if you see the trend that has happened, uh, we are going up that ladder. These are all spends that are on the wave of premiumization. Right? These are spends that they are considered to be some sort of a luxury. Right? So, what is your household income per annum? Is it less than 10 lakhs? Is 10 to 25? Is it 25 to 50? Is it more than 50? So put in your answers in the chat box. Okay, a lot of B's. So where do we all stand then? Right, we are somewhere in the upper mid, somewhere between lower mid and upper mid, and this is what has happened to aspirational India. You see the number of households that are in the lower bracket have slowly started to move on to lower mid, and lower mid have started to move on to upper mid. This is the growth that I was talking to you about. As the number of households keep on going up, now we are seeing a lot of change in the pyramid as well, right? So what uh, is being projected is there will be a lot of uh, Indians that are more aspirational, that are coming up under the uh, upper mid segment, where this is where most of the consumption is going to come out from. Right, this is where aspirational India comes in. This is where Indians who are more aspirational, they're going to go out and buy a house, they're going to go out and buy a car. They are the ones who are going to drive spending. Right, it's not only that, the pyramid keeps changing. Right, so the households that are there on the lower bracket, they are moving up the ladder, and you're seeing that as the number keeps on going up, you'll see our per capita income going up. As you see our per capita income going up, you'll see our per capita consumption going up. Right? And this is where the opportunity comes in for consumption. That we are all moving up the ladder. We are all changing our spending patterns, and all of this is going to benefit consumption companies. Again, this is another example of premiumization. And if you look at premiumization in whiskey, if you look at what has been happening, we've been shifting from regular to more premium whiskeys. I think everybody here somewhere perceive whiskey to be luxurious, and you're not going to settle for low. Uh, uh, you do want to go on to the premium side. You do want that experience. And if you see from the data that is out, the shift has been more to premium. So we are moving more up the premium side. Okay. So now this is just one segment. But what about your regulars? You are seeing that people are moving up the ladder even for their detergents. Right? You're seeing even the price for premium detergents for FMCG players is 3 times that of the lower one, right? And we are moving towards that. We are not uh, averse to going towards it. We are being conscious about where we want to spend. We are being conscious about our clothes. We are being conscious about a lot of things, right? So, and we are going up to the premium side, right? So the premium is 3 times that of a mass product, right? These were just some highlights on premiumization. If you look at what's been happening just on numbers, the segment for premium that is contributing to value is going up, right? The value contribution, which means that most of the money that is coming here is coming from here, though the volume might be low, but the value is quite high, right? So you're seeing the number from mass coming down, and you're seeing the number for premium continuously keep going up. Now, this is the most important thing, right? Uh, Organized players have gained market share from 15 all the way up until 20, right? So if you see what's been happening in the apparel side, it was only 18% and now it's 30%. If you see in paints, yeah, paints is sort of a 3-4 player market. There are more players that are coming in. So you are still seeing that the organized share is quite high. See in the jewelry side, again that number has gone up. You see the food service market, which is where most of us are spending our time on for services. That also again has gone up. Right? So we are only on the path to increase the share of organized players from unorganized to organized. and this share is only going to go up. And this is not only in these particular industries. Every industry is going to go through that wave of unorganized to organized. Some industries take a long time, some industries don't take a long time, but these are industries that have shown fast shift from unorganized to organized, right? Again, if you look at consumer durables, look at the share of unorganized in the entire space, right? Every segment of the consumer durable space has an average of 30 to 40% that is unorganized. So there's a lot of uh, scope for growth. There's a lot of shift that can take place from unorganized to organized as we start getting more and more formal. As growth keeps coming in, you are going to see the shift from unorganized to organized. So right now in this entire space, your unorganized market share remains really high. Okay. Uh, Now, if you look at the consumer market in India, now the population that is having access to internet is just about 50%. This is 2020 number, right? But the projection is that in the next 2 years, we will have 70% of Indian population having access to that internet. Likewise, the number of smartphone users are just going to go up. So your access to internet again becomes a lot more easier, right? Uh, the number of people, the population using these online services, that is just about 22%, but that number is expected to double. So this is huge. This is a huge number. This is where your digitization is really going to come into place, right? You are seeing that already smartphone users, the number of smartphone users are going up, and internet is not very expensive. India happens to be one of uh, uh, the lowest cost internet providers in the world. It's very easy to access internet in India now. Uh, so the use of these services is only going to go up, right? So online shoppers right now are just about 10 or 15%, but that again is going expected to double, right? So we are in that place that digitization is going to make it a lot more easier for us to get access to these products, to get access to these services. So if you look at the BPC market in India, this is your beauty in personal care. This is where most of the online shopping really happened. So if you see, with more penetration coming in, it's expected to double, right, in the next 5 years, right? So online BPC, that is beauty and personal care, is growing at a very, very fast pace, right? So if you look at just the market, it has doubled, it has rather tripled, and online penetration again happens to be the biggest driver for this entire growth that comes in. Okay, so digitization is playing a huge role in growth for online products, for online services. And as the number of smartphone users go up, as the number of people coming in into that entire ecosystem going to go up, as people use these services, you are going to see a lot more traction coming in from these companies. If you look at where this entire uh, growth is coming from, you are seeing majorly they are tier 2 and tier 1. Right? Metro still is a huge part, but in terms of volume, you are seeing a lot coming from tier 2 plus cities, right? So it's not only the urban, there's a secular growth that is coming in into India. And this is sort of a play all India scenario where everybody is contributing to this growth. It's not just the big cities in India. Everybody is contributing to this growth. And so this is very positive for digitization in India. Now, I come to the last part of my presentation, which I'll open the floor for questions after that. So in terms of valuation, it has remained expensive, and right now also it is somewhere trading around its average. Consumer always tends to trade at a premium to the Nifty. Uh, and if you look at just pure metrics of price to book also, they are expensive because of the growth that is coming along with it. So periods of low growth is a great opportunity for any investor to look at consumption as a theme. Periods of high growth is not a good place for investors to look at this entire space, because valuation de-rating can easily hurt investors, and you might be stuck in for a very long time. So 2018 to 2020 21 was that period of uh, uh, valuation de-rating, and now we have come to that place where things are looking good, and the only way for investors to invest in these spaces is to take a basket approach, right? So it's not just one particular company. When growth comes in the entire basket, there will be specific companies that contribute to premiumization. There will be specific companies that contribute to digitization. So you can't miss out on any of these drivers for growth. And basket approach is the best way for investors to take advantage of this entire sector. So I'll open the floor for questions. I'll also put in our number. So if you're not on the program yet, do get in touch with us. We will be able to guide you in terms of how you can take advantage of this sector, what are the baskets that you need to look at, and how well it will fit into your entire goal. So I'll open the floor for questions. You can ask me any question regarding this entire space. If not about this space, about any other space also is completely okay. But whatever question you have, I'm very happy to address. We have a good amount of time. So I'll open the floor for questions. Please type in your questions in the chat box. Do also refrain from asking me stock specific questions because I'm not going to take stock specific questions. Like I said, it's a basket, and I would speak to you and be able to answer to you from a basket perspective. But please avoid asking me questions on a particular stock. So there is a question on retail. Uh, Again, I will not answer stock specific questions, but I will just talk to you about retail. See, inflation has hurt retail companies. Why? Because the people are okay to spend more. That is just in terms of expensive products, but the share that has come in from the lower end spectrum has gone down. So inflation is hurting them, and they would take some time to recover. And your comparison to pure consumption companies to retail again is not apt. You have to compare FMCG companies to FMCG companies and retail to retail. There's a question on uh, which segment of consumption will witness the highest growth. See, I think in terms of growth, uh, premiumization will definitely uh, uh, give you that good growth. But premiumization doesn't come in a year or 2 years. These are trends that take at least 3-4 years to play out. But premiumization within FMCG, within cosmetics, uh, will contribute to growth that comes in because these are all new segments that have started. BPC is a new segment that online BPC is a new segment, and a lot of people have accepted it very well. And these are companies that are proving to be one-stop solutions for all your products, right? Be it beauty, personal care, be it luxury goods, proving out to be one-stop solution. So let's see how that really plays out and how people are reacting to such a scenario. So we don't know within that entire space also just because we give them access, are they going to accept it? But right now, beauty personal has gotten good acceptance. So growth can come from FMCG and cosmetic based purely on formalization. Based on premiumization in terms of consumer durable. As inflation sort of plays out, you will see uh, 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 this space coming back, and then we can see what's happening to growth there. See, most of the problems that come in from the entire space consumption is that because of high growth, you are paying a very high premium. Now, that high premium always works against you. It doesn't work for you. That premium comes at a cost. The premium that you pay in terms of valuation for these companies comes at a cost because they're fully priced in for growth that comes in for 10 years. You're foregoing growth that can come in to you in the next 5 to 6 years. That is just in terms of premium that you're paying for these companies in terms of valuation. So we have to be very careful of the starting point that comes in for this entire space. There's a good question on uh, consumption space is overvalued. And even the data that came in a couple of days back mentioned that even the festive share didn't increase the volume. See, the point is, uh, you have to know what these companies really are doing. It's not about monthly data that comes in or quarterly data that comes in. Yeah, you can see these data that come in, right? But if you look back, things have really changed. The Indian consumer has really changed and evolved. We are accepting a lot more innovation that comes into this space. Right? So, what are you really paying for these businesses? Right? You are paying like I said, the segment is custom to high valuation because of the growth that comes with it. But your starting point really matters, right? So, we have come at a point where only this year consumption has done extremely well, but the last 3 4 years it has lagged, right? And people perceive this to be a defense. But when the tide turns, this is a growing segment, right? So your starting point really matters, and we have come at a point where you can't go overweight on this segment, right? But you also can't go underweight. So having a balanced approach to this entire space works for an investor. If you want to know how we are taking that balanced approach, which parts of the market that we are placing ourselves for growth to come in, I've put in the number. Do get in touch with us. Do get onto the program. We can your point of contact will help you start the paperwork, and then if you're really interested in this entire space, then you can start doing. But how we are looking at the space is there are parts of the market that are cheap, and we want to go only towards areas that are cheap. That's how we've looked at it. It's not very cheap, but it's somewhere between fair to cheap. So when you look at the valuation band, it's very expensive, fair, cheap, and cheaper. This is how we've always done investing for uh, uh, our supporters for Milestones to Wealth, where uh, whenever we do think that there is an opportunity for investors to take advantage of, we do look at it when it is somewhere around fair to cheap. Where do you see growth on online cosmetics like Nykaa? Again, I've shown you data on beauty and personal care. I don't want to speak anything about any particular company, but I've already shown you the data and it's open to interpretation. Okay, there's a question on what is the probability of a US recession in 2024, and will that affect consumption? In the US, it has already affected consumption. you are seeing their companies struggle because of high inflation. Consumption has really come off there. There are only parts of the market that are doing well in the US. And we've been hearing recession coming in for the last 2 years because of high interest rates, because of high inflation. Uh, they are expecting a rate cut coming in next year, but we don't know if they would really go out and uh, stick their neck out for that. The only thing that they've been sticking their neck out for is how they have to control inflation and make sure that whatever growth comes in should not be hampered because of high inflation. Right. So naturally, they have to forego some bit of growth that comes in for 2 years or 3 years for the next 10 years to continue to grow. Right? So the probability of a recession in the US is there. Back then, the perception was very high. Now the perception is that yes, there is a slowdown in terms of consumption there. Already, it has affected. High inflation has affected consumption in the US. If that happens, it's not only this segment that would do badly in recession. The entire world would have some bit of problem. It just in terms of perception, not in terms of fundamentals. So I did not put in the data for luxury goods. If you see luxury goods and what they have been doing in the last 2 years and the numbers that they've been posting in the last 2 years, you will not see that there's a recession. But the lower end is really affected by it. Yes. Our view is that we don't want to take a direct exposure towards mid and small caps. I've already done a presentation on where the opportunity lies, and we do want to go overweight on the large cap space, and this has nothing to do with uh, us being averse. We have always taken a concentrated approach for certain segments of the market, be it large, be it small, or be it mid. We don't have a particular bias for no, we don't want to have this particular market cap. We should not be seeing all this. But the whole point is that we don't want to take a very broad-based approach for for parts of the market that are very expensive. Right? We can take that sort of an approach when the market is cheap for parts of the market that are cheap. But the whole point is we are not averse to taking such exposure. It's just the type of exposure that we want to take in these parts of the market. Right? So we want to stick to certain businesses. We want to stick to certain themes when we look at small and mid cap. Right? So we already have a PMS that is a small cap PMS. It's one of our best performing PMSs. Even there, we are taking concentrated approaches. We are being cautious on which business we are buying. We are being cautious on valuations. We are being cautious on position sizing. So it's not that we are averse to it. That this is only we are only going to do this. We have always been open, and the way we are taking an approach into this space is to be concentrated in a particular segment of the market or particular theme or particular sector that has good enough exposure, that offers us good enough growth for what we are paying, right? For the valuations that we are paying for, right? So if you do want to know what has happened in broad-based small and mid-cap funds or that particular segment of the market, I have done a presentation I think 2 weeks back on how large caps are an opportunity. So do look at it. It is on YouTube. It is on the page Milestones2Wealth. I think it's there somewhere around the live or the videos. You can just see it. Just I think it's just 2 weeks back. That's where the big opportunity lies, and that's where we are wanting to help investors to uh, position well so that they can meet their goals for the future. I'll just keep the floor open for another couple of minutes. If you do have any questions, do type it in. And I'll do my best to sort of address it. But if there are no questions, then we can close. If you do have some questions, do type it in. I'll keep the floor open for another 2 or 3 minutes. Okay, I don't think there are any further questions, but so we have another webinar at 12 o'clock. It is on the debt market, and debt this year has proven to be a good opportunity. Short-term yields are 7.5%. Corporate bonds also are somewhere in the same range. So what are the opportunities that can come in next year for debt? To attend that webinar, we do find that the next couple of years, opportunities are going to open up everywhere, and we should not miss out debt as an opportunity. You can see it online. You can just go on to our page online, and there you will find that link. In fact, I can just post it in the comment box. Just give me a minute. Yeah. So it's a direct link. You can join in. It's on debt and the opportunities that can come in on debt. So thank you all for joining in. Have a great weekend ahead. Thank you.